All right, let's talk about a problem that keeps way too many business owners up at night. A warehouse full of products that just won't sell. We're going to tackle the distributor's dilemma head-on and figure out how to turn that dead inventory into some serious value.
So, could your dead inventory actually help you sell your business? I know, it sounds totally backward, right? Everything we've ever been taught says that stuff is a liability, a major drain on your cash. But what if it could be a hidden asset, especially when a buyer comes knocking? That's the big idea we're digging into today.
So here's our game plan. We'll kick things off with the dilemma itself, then get a crystal clear definition of dead stock. We'll look at it from a buyer's perspective. Is it an asset or a liability? Then we'll jump into real strategies to unlock its value, prevent it in the future, and finally, turn this whole thing into your negotiation superpower.
Okay, let's dive right into Section 1, the distributor's dilemma. You know, you might look at shelves packed to the rafters and think, wow, look at all that product. But when you're trying to sell your company, those very same shelves can be the anchor that sinks the entire deal.
And this problem has gotten a lot worse recently. According to M&A advisor Vanil Ramchandran, after all the supply chain chaos back in 2020, tons of businesses just loaded up on inventory, just in case. The problem is, they never really dialed it back down. That bloated inventory level became the new and very expensive normal.
And here's where things get really hairy. Just imagine this. Your inventory suddenly jumps from $1 million to $1.7 million, but your sales? Totally flat. A potential buyer sees that, and immediately, alarm bells are ringing. They're asking, why is so much cash tied up in stuff that isn't selling? It creates friction right from the very first conversation. Okay, so that brings us right to Section 2. I've been using this term dead stock, but let's make sure we're all on the same page. What are we really talking about here? Simply put, dead stock is the stuff in your warehouse that you just can't sell. Period. It's a catch-all for everything from damaged goods to incorrect deliveries to those seasonal items that are, well, out of season. It's literally the inventory that's gathering dust in the corner. And here's a super important distinction. Dead stock is not the same as returned stock. A returned item was actually sold once. It went out the door and came back. Dead stock, it never even got that far. It's been sitting there untouched from the moment it arrived. And just so you get a sense of how big this problem is, for a lot of distributors, dead stock can be 10 to 15% of their entire inventory. Just think about that for a second. That's a huge slice of your capital just sitting there, losing value every single day. All right, on to Section 3. This is where we need to shift our perspective. Let's put on a buyer's glasses and look at those shelves. What do they see? An asset or a liability?
Well, let me tell you, a buyer sees dead stock through a financial lens, and it is not a pretty picture. It's a whole cascade of problems. First, your capital is tied up. Then, you're paying to store and insure the stuff. But maybe the biggest hit of all is the opportunity cost. All the other things you could have been doing with that money. It's a sea of red flags.
So how does this even happen? It's usually a combination of pretty common mistakes. Maybe you get a little too optimistic with your demand forecasts, or you jump on a bulk discount from a supplier without really knowing if you can move it all. Or maybe the market just shifts under your feet. Each one is a small crack that can lead to a really big problem.
Okay, enough doom and gloom. Let's get to the solutions. Section 4 is all about how we turn this problem into an opportunity. How do we start unlocking the value that's just hiding on those shelves? The very first step is to get proactive and turn that stock back into cash. Bundling slow movers with your best sellers is a classic tactic. You can also sell on online marketplaces or work with specialized liquidators. The main goal here is to recover some value, because right now, you're getting none. Now, this is where we get strategic. It's not just about getting rid of the stuff, it's about how and when you do it. For instance, running a big clearance sale before you even start talking to buyers. That sends a powerful message. It shows you're proactively managing your business. It screams competence. Let me tell you about a real-world deal. An owner was selling his tire business. The asking price was $1.5 million for the company, plus, and here's the kicker, another $1.3 million for the inventory. For any potential buyer, that massive inventory number was a huge stumbling block. So here's the genius solution they came up with. Instead of forcing the buyer to swallow that whole $1.3 million in inventory, they restructured the deal.
The sale only included the essential, fast-moving $500,000 worth of tires. The seller then took care of liquidating the rest on his own. That one creative move not only saved the deal, but let the seller pocket all that extra cash himself.
So we've talked about how to handle the stock you already have. Now let's move to Section 5, which is all about making sure this problem doesn't happen again. Let's stop it before it even starts.
When it comes to prevention, you've basically got two powerful tools. First is the just-in-time approach, which just means you get goods delivered only as you need them. The second, and honestly, the more powerful method, is using data-driven controls. You let real sales figures and analytics guide your purchasing, not just guesswork.
And to really be data-driven, you have to track the right numbers. There are 3 metrics that are absolutely essential. What is the actual dollar value of your dead stock? How fast are products selling through? And what's your lost sales ratio? If you know these numbers, you can control them. Okay, let's bring it all home in our final section. We're going to completely reframe this entire issue and show you how to turn a perceived weakness into your secret negotiation superpower.
And the potential here is massive. Just check out this case study. An auto parts distributor implemented a real-time inventory system and ended up eliminating $3.5 million in excess dead stock. That is a game-changing amount of capital to free up. And this is the core takeaway. When a potential buyer sees that you have a system, that you track your metrics, that you are proactively managing your inventory, they don't see a liability. They see a well-run, efficient business. They see a competent operator. And that becomes a key way to stand out from your competitors.
So dead stock doesn't have to be a dead end. With the right strategies, it can be a source of cash, absolutely. But more importantly, it's a testament to your skill as a business manager. So the final question I'll leave you with is this: what hidden value is waiting on your shelves?